Hey, my All Stars, welcome back to this space. This is one to definitely say I enjoy being in this space. Welcome back. Thanks for the support that you guys have been giving. If it's not too much, click that like and subscribe and follow for more. Hey, love.
Yeah, 100%. You know what? It's our world, House Empire, and this is for us. This main video, the objective of this video is literally to talk a bit about developing a trading plan. And we all know that if we plan to fail, obviously you're gonna fail, but if you plan to win, you're definitely going to win. So we're going to be looking at how is it that we can create that successful plan to educate and elevate you in terms of your trading journey. How can you put this plan together to the best of your ability so that you optimize your success? That's really what we're looking at today. And without further ado, we go right into it because guess what? We know that we're planning on winning, and so we will never fail. All right. So, pretty much just remember hit that subscribe button. It's not gonna cost you anything, right? We've hit that 500 subscribing mode, and it's very good that you have subscribed to this channel because guess what? The aim is really to elevate and educate. So thank you so much for subscribing. Now, what are we going to be discussing? All right, so for our trading plan, we're gonna be looking at our trading goals, our trading style, or entries into the market, or exits out of the market, and definitely, we're gonna be looking at risk management, which is a vital part of trading. So this is literally what your trading plan needs to have. Your trading plan must have these 5 components. All right, so let's look at our trading goals. Now, when it comes on to trading, you must have a reason. There must be an underlying purpose as to why you're trading. There are many reasons why an individual decides to trade. These are just a few examples on the screen, but you will tabulate your own reasons as to why you're literally trading. That's it. There are many different reasons, one of which could literally be freedom. So, whether it be time freedom, location freedom, financial freedom, if that's your goal, then you'll have to ensure that this is something that you're looking towards achieving through your trading journey. So, your goals are very important for you to establish whilst going through your trading plan. All right, so after we figured out our goals, we want to be zooming in on our trading style. And when we think about trading style, you have to remember that each individual is unique. And because you're unique, you will have different things that work for you, right? So, what type of trader are you? Right? This is the first thing you need to ask yourself as, an individual coming into the space. Are you patient? What's your personality type? Do you want to get in the market and out of the market very quickly? So, do you want to be a scalper? Right? Do you want to be an intraday trader where you trade throughout the day? Do you want to be a swing trader where you hold positions for days or even weeks? Or do you want to be a position trader where you hold those trades for a longer period of time? So these are things that you have to ask yourself when it comes on to your trading style. You also have to account for when is it that you want to be trading? What trading session will suit you best? For me, I'm in the UK, and because of that, I would directly love, trading within the London session. I do touch a bit on the New York session, but what works best for you? Will it be the Sydney session or the Tokyo session, New York session, or the London session? These are questions that you've got to ask yourself. Now, you also have to figure out what is it that you will be trading. Will you be looking at trading forex currency pairs, which is, things like Euro USD, NZD USD, GBP, JPY? Will you be doing a bit of cryptocurrency, which is things like Bitcoin, Ethereum, Sol? Will you be looking at stock options to trade, stocks like SPY, Tesla? Would you be doing futures to trade GC or NQ? Will you be doing a bit of commodities to trade like gold or oil, right? What is it that you will be trading? These are questions that you've definitely got to ask yourself. And once you've got those sorted, then that's all good for your trading style. Let's move on to the next, which are entries. What do we consider when we're looking at our entries? Now, I do hope you're, making notes on this, because these are very important when it comes on to executing a great trade. Now, your entries. When is it that you're determining to actually go into the market? Because we're not going to be playing hopscotch and jumping in and jumping out without any form of confirmation. So first, we want to do what we call a bit of market mapping. And what I call market mapping is literally our top-down analysis, right? This is where you use the daily time frame to determine your confirmational bias, or to determine the direction in which the market may be going, right? So you look at your daily time frame, you evaluate the structure from the daily time frame, and then you come a bit lower to your 4 hour, right? And then you look for key levels within the 4 hour. And key levels could basically be your supply and demand zones, or areas where price is constantly having what we call a bit of support and resistance at, right? So you want to look for those areas and you want to highlight them on your higher time frame, and then you're going to come down to your lower time frame, be it your 15-minute or your 5-minute, for a suitable entry into the market. Now, directly for our entry confirmation, we want to ensure that we only enter the market at specific key levels of interest. This allows us to aim for tighter stop losses and great uptake profits. So that means we will have immaculate risk to reward on our trades. And we're looking for the candlesticks to show some form of, rejection or exhaustion coming towards the supply or the demand zones. Always pay keen attention to liquidity, right? And the candlesticks to help you to determine whether or not you can enter at a specific key level, right? So these are very important when it comes on to entries into the market. Once you've got this locked, then trading becomes a little bit easier. Now let's dive into our exits. All right, so there are 3 major ways in which we can exit a trade. So we can close out a trade manually if we see that the market is not moving in our favor. We have that option to pull the trigger and cut our losses. We are able to actually put a stop loss order and a take profit order whenever we're putting our trades on. Once you put a stop loss order, that's telling you, whenever price gets to this area, your trade becomes invalidated and it's no more. All right. And then secondly, you have your take profits zones, which means that whenever price gets to that level, you will be kicked out of the market with some profits. All right. So these are ways in which you can exit a trade. And how is it that you determine your stop loss and your take profit are really based on key levels that price have been to before, and your stop loss will give you that level of invalidation if price goes beyond that area, right? So these are key areas that you want to focus on. Key levels, or even your fib levels using Fibonacci, can also help to determine your entries and your exits into the market. So far, I hope we're having good understanding of how to kind of tabulate or plan to enter and exit the market. I hope you're finding this helpful. Hit that thumbs up button and drop a comment below as well in terms of anything new that you have learned from this video. So let's go right into the next feature of our trading plan, which is risk management. So we're at the final feature of our trading plan, which is risk management. And I hope those of you who are watching or listening understand that trading is all about calculated risk. You have to calculate your risk so that you never lose more than you're willing to lose. It's very important to understand your risk to reward in any trade that you're going to go into. I generally say 1 to 3 is the bare minimum, meaning that I'm risking 1% to gain 3%. That's the minimum, right? Apart from that, I could also risk 1% to gain 10% or onward. But bare minimum, I should be risking 1% to gain 3 as an average risk to reward ratio, right? I also need to do what we call a drawdown calculation. So we all know that as traders, we've got to give the trade some breathing room to get to the targets. What amount of breathing room do you want to give that trade? What amount of drawdown do you want to be exposed to before you go hit your take profits? Right? Some individuals, they trade with big risk and smaller profits, which makes absolutely no sense. So you want to ensure that, the amount of pips that you're risking is minimal in comparison to what you will be gaining if the trade does play out in your favor. Right? So that goes all the way back to risk to reward calculation. Your position sizing, which is basically your lot size, you can use a lot size calculator to determine the appropriate lot size for your trade, because your stop loss is taken into account whenever you're doing your lot size calculation. So you can use a calculator like on Cashback Forex or even Baby Pips. You have those as, tools that you can literally use. But understanding risk management is the key to becoming a better trader, because if you're using the appropriate risk and let's say risking 1% per trade, you will live to fight another day, right? You will live to make back profits. You will live to trade another day, right? So understand that risk management is one of the key components that you've got to understand down to the T and execute it effectively to ensure that you are having what we call capital preservation to get your profits locked in. Right? So you're preserving your capital, but at the same time, you're aiming towards great profits. That's the aim of risk management, right? So ensure that you protect your capital. You do the necessary things as it relates to risk to reward, as it relates to your lot sizes, not going to over leverage and all of that, and then you should be good to go. And that's pretty much your trading plan. So I really, really hope that this kind of provide you with a lot of clarity in terms of how to go forward and create your own trading plan. If you're still needing, a pre-made trading plan, you can click the link below. We've got one attached for you. Secondly, if you want a community to join, we've got a free trading community that we've started on Discord. So if you're new to trading and you want, to have a trading family, you want to join the All Stars trading community, feel free to definitely click that Discord link in the description below and join our family, because guess what? You're only one step away from achieving those goals that you've set out to achieve in your trading. So we love you all, we appreciate you all, and we hope that we've added a lot of value. Remember to hit that subscribe button and we'll see you soon.